But yes, the other piece, Gaurang, that's buzzing, especially in trade today, is you're seeing PSU banks in focus. Now, it's going to be a key couple of weeks because you're going to have the RBI, the RBI MPC, which is going to decide on rates. You're seeing growth come off, Gaurang, which is somewhere a bit of a concern where the banking system and the sector as a whole is concerned. And you're also seeing likelihood of rates coming off, which will likely hit margins. Asset quality issues have started to surface in Q2 as well. And therefore, a lot of analysts on the street seem to be suggesting that the larger banks, whether PSU or private, more private than PSU, are the way to go. Gaurang, what are your views with regard to this? Because clearly there's so much changing in the banking space.
So this change is all about, right? Right from the time the entire consolidation started in the public sector bank universe, we had 3-4 banks merging into one. We had 2 banks merging into one. And I think that was the cleansing process that was required because there was unnecessary large number of PSU entities and they were actually draining money. Let me say this. Good money was put behind bad money in terms of recapitalization. And I think whatever has happened in the last 3 to 4 years has actually made the public sector banks a much more stronger entity. Having said that, we are equal weight on both as a brokerage house, both public sector banks as well as private sector banks. Yes, there are issues with respect to mobilization of deposit. There are issues with respect to asset quality where large exposure is in the MFI segment. They have spoken quite clearly during the second quarter earnings. And they also mentioned that third quarter will be recovery process and fourth quarter onwards, you will see a lot of improvement. So to name a few public sector banks where we have coverage, and not to forget, I think before we hit the correction in October, November, there was a sell side report from some institute as far as the public sector banks and public sector companies are concerned. So the correction started much before the market saw the correction. In terms of valuation, we like State Bank of India, Canara Bank, Bank of Baroda, Bank of India, PNB and Indian Bank. And amongst the large cap private sector banks, HDFC, which is one of the top performer, we had a strong conviction at 1400 when the stock was not doing anything, and even at 1800 plus where it has started to contribute. Axis Bank, ICICI Bank, Kotak, IndusInd. These are some of the names, including IDFC First Bank, where we have a positive coverage.
Gaurang, just a quick follow-up. IndusInd, it's an interesting one because you've seen valuations compress in a big fashion this quarter after the quarterly numbers. Do you believe that this is an opportunity to buy? Because when I'm looking at the Bloomberg estimates, it's one of the highest target prices or among the top 3 in terms of returns over the next 12 months as per an average analyst expectations.
So we have a target of somewhere close to about 1100, roughly, approximately. I don't recollect it exactly. And I think sub 1000 and closer to 950 where it had been after the second quarter earning disaster. I think that should be a very comfort zone in terms of risk reward ratio. But we remain positive. Not to forget, this was the bank which was at 1300 and because of certain issues in the bank, the stock corrected to 350 a couple of years back and then it has managed to recover. So the ability to overcome difficult times is definitely there with the management. It is only a time process.
Right, thanks to that, IndusInd underperformed by 35% over the last 1 year. But let's shift focus to the IT space. We have this ER&D name, KPI Technologies, which is buzzing on the back of a brokerage note. If you can pull up the stock, it is up about 6%, actually 6.5% in the green in today's trade. And that is largely on the back of JP Morgan coming out with a note with a 41% upside. But let me just give you a brief about what the note says. Well, it has given it overweight rating and a target price of around 1900 rupees. Well, the brokerage house says that the stock has underperformed by 18% post its FY25 guidance was cut. But this is largely in the past because of 3 reasons. Number one, the guidance cut was due to slowdown in the decision making, which is largely short-term in nature and will likely bounce back. The other one is that although there's a real slowdown in the EV space, but the global OEMs, that is original equipment manufacturers, manufacturers will not go back to the ICE model. And number three, there were a few concerns around the QIP money raised by the company, but the company definitely did clear that this will largely be because of a short M&A acquisition and not a large one. Lastly, moving on to valuations, the brokerage house values the company at 41 times its PE and feels that this is a good entry point. And mind you, likes of Tata Technologies etc. trade at a higher valuation. So KPIT is generally with respect to the peers at a cheaper point in this time, and therefore it sees a 42% upside over here in the base case, and in the bear case just about 10% downside. Lastly, moving on to analyst recommendations covering this stock on Bloomberg, bullish stance is what we can see over here with 11 buy calls, 4 hold and 2 sell calls. The consensus target price implies an upside of about 24%. But Mr. Gaurang, coming back to you, well, KPI Technologies has underperformed in the past, largely 5% downside and largely flat over the last 6 months. So do you see this stock bouncing back coming forward as the global OEMs bounce back based on their target prices?
So firstly, I think we are a little bit more aggressive than this target report that you mentioned. We have a target of in excess of 2200 on KPIT Tech fundamental side. One of the smaller IT sector company with a great lineup in terms of product, services, and platform. Any company can go through a difficult time for maybe a quarter or two, whether it is a large cap, small cap, mid cap, or an MNC company. But looking at long term, if the company has the ability to overcome difficult times, then I think you should not change your investment theses with long term time horizon. So we still maintain a positive stance, and we're quite sure that the second, third quarter will be much better for IT universe as well as the next financial year.
Mr. Gaurav, just your 2,200 target price implies around 54% upside is what you could see over here. So do you feel the valuation is attractive from a valuation standpoint? Do you, recommend investors to, enter at this point in time?
So point and price is something that we really don't look at. Honestly speaking, if the investment is good, then I think any price point or any time is good enough to invest, provided how much time you want to give. So I think in the next maybe about year and a half, 2200 should be possible on KPIT Tech.
Gaurang, key to understand risks on this one, because strong positivity, of course, but what are the risks that one should be mindful of as an investor?
So slowdown hitting the EV segment, because that's one of the largest platforms and services and product where the contribution comes on from. But I think given the kind of lineup that we have seen in India, and of course the ability to scale the business into the overseas market, I don't think that's going to be very, very difficult for KPIT Tech.